Honestly, guys, I'm exhausted. Every time I open my portfolio, it feels like another punch to the gut. This latest collapse. I mean, is it ever going to end? I'm starting to seriously doubt if crypto was even a good idea.
John, I totally get why you feel that way. It's tough seeing red, especially when you've invested your hard-earned money. But we've been here before. This isn't the first time the crypto market has taken a nosedive, and it certainly won't be the last.
Exactly, Elizabeth. John, you've got to zoom out a bit. Think about the market cycles. Every few years, we see this pattern, massive bull run, followed by a brutal bear market, and then recovery, often to much higher highs. It's almost predictable if you look at the historical data.
Predictable. It feels anything but. I lost so much with Luna, and then FTX. It just keeps getting worse. How do you trust anything when major exchanges just evaporate overnight? It feels fundamentally broken.
Those were definitely major blows, John, and they shook a lot of people's confidence, including mine. But the failures of a few bad actors or poorly designed projects don't define the entire technology. They expose weaknesses, yes, but they also highlight the need for stronger infrastructure and better regulation, which ultimately makes the space more robust.
Think of it like the dot-com bubble. A lot of companies went bust, but the internet itself didn't die. It emerged stronger, with the truly valuable companies surviving and thriving. Crypto is going through its own dot-com bubble burst phase, clearing out the junk and paving the way for legitimate projects to shine.
But the losses, Kostas, they're so real. My portfolio is down like 70%. It's not just a dip anymore, it's a full-blown crash. How long until it comes back? If it ever does.
That's a very valid concern, John. Nobody can predict the exact timeline. However, if you look at Bitcoin, for example, after every major bear market, 2014, 2018, and even the start of 2022, it has always recovered and then surpassed its previous all-time highs. It's always taken time, sometimes a year or two, but the trend has been consistently upwards in the long run.
And let's not forget the halving cycles. Bitcoin supply shock events, which happen roughly every 4 years, have historically preceded significant bull runs. The next one is coming up in about a year or so. That's a major catalyst that a lot of long-term investors are looking forward to.
The halving. Yeah, I've heard about that. But is it really enough to overcome all this fear in the market? Everyone's so scared, including me. The news is just constant FUD, day in and day out.
Fear is powerful, John, there's no denying that. But sometimes intense fear is exactly when smart money starts accumulating. When retail investors are panicking and selling, institutions and long-term believers often see it as an opportunity to buy assets at a discount. It's counterintuitive, but that's often how markets work.
Think about it. While prices are down, development hasn't stopped. Teams are still building, innovating, improving the technology. Ethereum just had its merge, moving to proof of stake, which was a massive technical achievement. That sort of foundational work continues regardless of price fluctuations.
Okay, I see your point about development, but what about the practical use cases? Beyond speculation, how is it really changing things right now to warrant such a massive valuation in the future?
That's a great question, John. We're seeing real-world adoption quietly accelerating. Think about remittances, for instance, sending money across borders faster and cheaper than traditional systems, or supply chain management using blockchain for transparency. Even NFTs, beyond the art craze, are finding utility in things like ticketing, digital identity, and gaming asset ownership. It's not always front-page news, but the underlying infrastructure is being built out.
And DeFi, decentralized finance. It's still a nascent industry, but it's demonstrating how financial services can operate without intermediaries, offering more access and potentially better rates. The promise is huge, even if there have been some growing pains. It's like looking at the early internet and asking what you'd use it for beyond email. Nobody envisioned streaming, social media, or e-commerce back then.
So, you're saying this is just a necessary purge, a natural part of the growth cycle. It just feels so much more extreme this time. The macro environment, with inflation and rising interest rates, it just adds another layer of fear to everything.
Absolutely. The macro environment is definitely a major factor right now, impacting all risk assets, not just crypto. We're seeing similar downturns in tech stocks and other speculative investments. Crypto isn't immune to global economic forces. But it also means that when the broader economy starts to recover, crypto often leads the charge as risk appetite returns.
Historically, after these harsh crypto winters, we've seen retail interest dwindle, but institutional interest actually grows. They're doing their due diligence, building out infrastructure, and preparing for the next cycle. Companies like BlackRock, Fidelity, and others are seriously exploring blockchain technology and digital assets. That's a huge sign of long-term validation.
That's interesting. So while I'm here stressing, big players are seeing opportunities? It's just hard to reconcile that with what I'm seeing every day.
It is, John. It requires a certain amount of conviction and the ability to look past the short-term volatility. Nobody said it would be easy, but if you truly believe in the long-term potential of decentralized technology, then these periods become accumulation phases, not just periods of despair.
And crucially, it's about managing your risk. Don't invest more than you can afford to lose. Dollar cost averaging, where you invest a fixed amount regularly, regardless of price, can take a lot of the emotion out of it. It's a strategy many use to navigate these cycles.
Dollar cost averaging. Yeah, I've heard about it. But it's hard to keep putting money in when everything just keeps dropping. My gut tells me to just cut my losses and run.
That's a natural human instinct, John. Fear and greed are powerful drivers in financial markets. But often, the best decisions are made when you go against your immediate emotional reaction. If you'd sold everything in the depths of the 2018 bear market, you would have missed out on the massive gains of 2021. Hindsight is 2020, of course, but history offers valuable lessons.
Think of it this way. When you buy during a bear market, you're essentially getting assets at a discount. Imagine being able to buy Bitcoin for 15K or 20K or Ethereum for under 2K. In the next bull run, if they hit new all-time highs, those prices will seem incredibly cheap. It's an opportunity even if it feels like risk now.
So, you guys are genuinely optimistic that we'll see a return to those very high levels you mentioned earlier.
I am, John, not just optimistic, but I see the long-term trends and the underlying innovation. The world is becoming more digital, and blockchain offers a fundamental shift in how we handle data, ownership, and value. That's not going away.
Absolutely. I firmly believe we haven't even begun to see the full potential of this technology. We're still in the early innings. The next cycle, whenever it truly kicks off, could dwarf the last one, especially as more institutional money comes in and mainstream adoption continues to grow. These collapses, as painful as they are just part of the maturation process.
It's a lot to process, and it's hard to shake off the worry. But hearing your perspectives, the historical context, the development still happening, it does make me feel a little less alone in this. Maybe there is a light at the end of the tunnel after all.
There always is, John. It just takes patience and a belief in the underlying technology. Focus on what's being built, not just the charts day to day. And always remember to manage your risk and only invest what you can comfortably afford to lose.
That's the key. This isn't a get-rich-quick scheme. It's a long-term investment in a revolutionary technology. These bear markets are where fortunes are made by those who are patient and have conviction. Stay strong, John, and keep learning.
Thanks, guys. I appreciate the chat. You've given me a lot to think about, and hopefully, a little bit of renewed hope. Maybe I'll start looking at those charts with a slightly different lens now.